Hello and welcome to the Property Development Club podcast. I'm John Kennell and I've got Andrew Crosby joining me again today. And we've got an action-packed show for you. I need to start by apologizing for missing the show for the last couple of weeks. We've been just flat out busy getting the Property Development Club Mastery course completed. So that's all done now. All of the videos are available, all the courses. So you can just dive right in. The course is self-paced. It's lifetime access. So if you haven't signed up, just head over to the propertydevelopmentclub.com. Andrew, how are you doing this week?
Yeah, good, John. Luckily, I'm not dealing with any wastewater issues around the country. So, look, the market, John, the market there's a lot of, the OCR got cut on the 14th of August, and I'm waiting for the data. But the data that just came out from RENZ and from on interest.co.nz, etc., it's still only July's data. So it doesn't show anything from 14th of August. But you can give us a bit of a spiel on your experience of the market and who you've been talking to recently, because you've been out and about.
Yes, I have. Yes, I have. Thanks. Yeah, I've been speaking to real estate agents, valuers, other developers. There's definitely an uptick in optimism, right? So the property market feels more confident, and it is being seen. I mean, what we're definitely seeing is that properties that were sitting on the market for some time, people were watching them, hoping that they were gonna drop a little bit, and those places have gone. So those places that have been on the market for a few months, they've gone. Some properties are even gone to multi-offer.
You're talking about existing stock, right, or new stock?
Yes, I am.
Existing older stock.
Yep, exactly. It is mainly that existing stock, and I think part of the reason that the existing stock is more attractive at the moment is that new construction has gone up quite a lot. I mean, the average build of a new home is about 10% higher than it was even 6 months ago. Some of that's due to the government's new insulation requirements, but we've also seen increases in costs from development contributions. Hamilton City Council had threatened they'd increase them 100% this year, but they only increased them by 30%. They will go up 100% over the next 3 years. So we've got a lot of things driving up the cost of new housing, which is making the older stock relatively more affordable and of more interest to some of the buyers. I think part of it, though, is also that there's more activity from first home buyers. Okay, so and the first home buyers, the older stock tends to be a little bit cheaper, and some people still want a backyard or they want a standalone home, especially first home buyers. So there's a lot more interest there. I mean, one of the reports that I was reading by Jared Kerr at Kiwibank, what did he said that it was actually unusual, the level of first home buyer purchasing at the moment, a lot more than investors. So it's unusual, but those investors are starting to come back, but slowly.
And with the interest deductibility, and the exodus from investors buying second-hand product over the last couple of years because of interest deductibility, I think the bargains are probably in those properties, but they'll get soaked up pretty quickly.
Oh, I think investors, certainly some of the investors I've been talking to, they're selling those older properties because they think it's only a matter of time before we get a change of government again, and then the interest deductibility is removed again.
Just round and round the ring of rosy.
Exactly. I mean, and that's one of the things that I did want to talk about today, is that the new government does seem to be serious about trying to increase supply, trying to make housing more affordable. They're trying to make it a little bit more attractive for investors. And while you still get a lot of negative feedback on social media about how landlords are driving up the price of houses and landlords are driving up rents, landlords are price takers. They're not price makers. I mean, if you go and buy an investment property, you have to pay the market value for it. If you put your property on the market and rent it out, you get what people are paying at the time. Landlords don't set the prices. Landlords don't make houses more expensive. And as I've said on this show before, I mean, the 1,000 units that I've built over the last 20 years, most of them were built thanks to property investors buying off the plans, paying a 10% deposit, making it easy for me to get finance. So it's not just investors. Another problem is, it's been made so unattractive for investors that rents are rising at a 30-year high. The rate of rent rises is at a 30-year high.
Well, hang on, John. I think there's a bit of a pause in the rents at the moment. just looking at the median residential rents July 2024. I mean, Waikato went up $20 monthly change, and Marlborough and the West Coast went up. You know, Auckland's down a fraction. Taurangaa's holding steady. Wow, Bay of Plenty, $650 the median rent. It's the same as Auckland, $570 in the Waikato. So I think you touched on it last time, right? The rents they've been rising and they'll go up again, but we might be in a bit of a balance at the moment.
Well, if I read, this is from Jared Kerr's latest report. It's titled The Travelling Economist. He says here, rental yields are still rising as rents are running at the fastest pace in over 30 years, while house prices are still falling in parts of the country. So, and he's saying here the government has reintroduced the interest deductibility, they shortened the bright line test, they're watering down the triple CFA. They're trying to do what they can to bring investors back in. But as the valuers I spoke to this morning, one of the difficulties they are seeing is the DTIs are now restricting people from buying investment property. Because if you're a mum and dad and you've got the debt already, you're getting very quickly tapped out.
Well, you're looking at that. You got the long-term forecast, and I'm looking at this monthly thing. So the guts of it is, though, rents will keep going up. It's getting harder to build houses. New supply is it's not stopped. There's green shoots, but you know, pretty much. And if immigration keeps going along, which it will, it's going to go up and down. Now, here's some news for you on the government. Crappy apartments. How small is too small? What do you think? I think that was Chris Bishop's line.
Studio, 25, 30 square meters.
But is anything too small? Does it matter?
Well, I've been to Japan, and you have a whole family living in a 15 square meter room, effectively, and that's their living room and their bedroom and their kitchen and their lounge. I think that's probably too small.
But does the market dictate? No.
Well, I look. I can't think. I actually can't remember exactly what the sizes, the minimum sizes are in Waipa right off the top of my head, but I know they're bigger than they need to be. I think the studio is something like 35 square meters, the numbers don't stack up, which is why there aren't any, right? Similar for one bedrooms.
The interesting thing in Auckland is, the government's saying you can have small apartments with no balconies, and then they're saying, but you've got to have extra parking, big wide footpaths. So it's all over the show.
What are the wide footpaths? 1.4 to 1.8 wide footpaths eating into your site.
Look, we just had a great chat to a planner before in the Property Development Club weekly call, and his clients, they're losing 20% yield. So basic math, 20% is your best case profit pretty much. So you're losing there's no profit in some of these sites. I mean, it changes. The supply and demand dictate that, and that's why house prices have a real good chance of going vertical.
It's a constant battle between government and council, and so we've got a government now who want to increase supply and want to make housing more affordable, and we've got councils who absolutely don't want any more housing because they're already in debt. I mean, Hamilton City Council just had a rating downgrade, so they're going to have to. It's going to cost them more to borrow going forward.
I've got a graph. Where's that graph? I'm not sure how we can.
If I look at Waipa District Council at the moment, so they've just brought in new rules around density, and that was with a lot of pressure from government. They've made it a little bit easier to increase density in Waipa District, so you can build a little bit closer to the boundaries. The height to boundary restrictions have been reduced a little bit. You can increase your site coverage. So there are a few things that have made density easier, but then they bring out these rules, and at the same time they put an infrastructure overlay across the whole Waipa district, which means you can't do anything until you get council approval. And the first step is getting a water assessment. Now, to get a water assessment, currently you have to go to one consultancy. They own the model. So good old New Zealand monopolies, you're paying something like $8,000 to $10,000 to see if water is available. Now, there are no problems in Waipa currently with water. It's a completely unnecessary cost, But it gives the ability for councils to immediately say, no, you can't go ahead with the project. And that's step one, right, is that 8 to 10,000. Then you've still got to see if there's sewers available, how you're going to deal with stormwater and all of the other requirements in order to get a consent. On the one side, you've got government making them free up. On the other side, you've got councils going, no, we don't want density. And part of it is just NIMBYs, right? Not in my backyard. Nobody wants a townhouse development built next to them. But part of it is councils don't have the funding for infrastructure, right? Which is it's so ludicrous, the amount of money that was wasted during COVID with this lolly scramble, tens of billions of dollars just thrown out with no return. We could have been building sewer and water and stormwater, but it's not politically exciting. No prime minister wants to stand up and say we're building more sewer pipes.
Your rates, or at least the people in Hamilton's rates, I'm looking at a graph here. It's quite astonishing.
They're going up 100% over the next 3 years, along with the development contributions.
Yeah, well,
the rates are going up 100, and development contributions are going up 100.
So rates next year, they're one of the highest in the country. It's going up 16% next year. Wellington Cities takes the cake with all their exorbitant spending at about 17.5%. Auckland's a relatively modest, I hate to say it, 6 point something %. And that's too much. What's inflation? Inflation's probably deflation at the moment, to be fair. So it's
we're under 2. I know a couple of months back it was running at 2. If you take into account now, like what's happening right now, as opposed to our information is so lagging that the data that's being reported is well behind.
What are you seeing in open homes? You said you talked to some agents. What are you seeing? What are they saying?
A lot more activity. Yeah, a lot more activity. A lot more people out and about. Let me just have a look, actually. What were some of those comments I did make a note of? Where's it gone? Okay, here we go. So this is from Ollie over at Squirrel Money. He's noticing a lot more activity, more buyers across the board, definitely more first home buyers. Investors are starting to come back in. Properties that were sitting on the market are moving. Developers are slowly stepping back into the market. So people like me who are buying development sites now and consenting them, getting ready for what will hopefully be an uptick in prices next year. Kiwibank are talking 5 to 7% increase. We're seeing increases predicted by a number of economists now. So they are starting to see developers come back.
Well, the recent thing I heard, very recently, in South Auckland, the urban design criteria has just gone ridiculous. And, and developers are having to present cases why there are so many chairs around a table and the size of cutlery drawers for families and all these strange things. I mean, they're not making it, we moan about it, but they're not making it any easier. And it leads to one thing. It might not be this year, but it's going to happen soon. House prices are going to go like that. Some of the people have been talking to say, don't be too optimistic. We're still, interest rates are still, even if they come down, they're still 5 and something. No one's going to get really that happy until it's 4%. But that's what house prices do, right? We have a boom, we have a bust. We've certainly had a bust, having the plateau, and then she goes up, and you got to be in.
I don't see that anything's changed over the last 20 years. 27 years I've been a property investor, 20 years doing development, and house prices get more expensive. It gets more expensive to build under every government and council. It never actually changes. I mean, I think we need to change something around how infrastructure is funded in this country. Look at somewhere like Switzerland, which has a really good model, and the regions, the councils like Waikato, the state gets a share of the GST, for example. In Switzerland, the states get a share of income tax. I mean, why is all of our tax money going to Wellington? That makes no sense to me. Why doesn't a portion of our income tax stay where we live? It's administered by the people who live here. We understand our problems. We know what we want to invest in. Why can't we retain some of our tax money? Send half of it to Wellington so they can waste it. Right?
Just be careful. It'll become like America, where there'll be the Waikato region will stick an income tax on you, and then Hamilton City will stick another income tax on you. Then they'll stick a sales tax on you.
But it works in a way because you've got somewhere to go, right? When states like California go nuts and overtax you and bring all these ridiculous woke regulations in, you can go to Texas, you can go to Florida. right? The only place New Zealanders can go is Australia, right? And that's where a lot of people are choosing to go right now. And that doesn't help us, right?
You're quite right, because in Phoenix, there were 14, back when I was back there were 14 different cities as part of the city of Phoenix, 14 different boroughs. They all had their own taxes, and they all competed to get development. They wanted new homes and development in their area, very simply, because they get more money.
Exactly right. And that's exactly the same thing as Switzerland. The states compete with one another. And why shouldn't it be the same in New Zealand? So developers are starting to come back into the market. Developers who mainly developers, experienced developers, well-heeled developers who sort of know the game. They were selling down a few years ago. They're starting to buy again now. Obviously, you've got quite a long runway as a developer, so you've got to be planning well ahead of the game. I mean, I've just bought a few development sites as well. I'm in the process of consenting them now, getting them ready for sort of mid next year, when I think the market's really going to be moving again. Now, one of the things you mentioned there was the banks do have money and they are lending, but the criteria is pretty strict, especially around pre-sales. But second-tier lenders have got money. They are wanting to lend. They're a little bit more flexible around those pre-sales, but it's costing you a bit more. So all-in costs for the bank, for a developer, you're paying around 9-10% for money. If you're borrowing from a second-tier lender, you're paying sort of around that 13 to 14%. So you're getting more flexibility. You're able to borrow a bit more, but you are paying more for it.
And there's a little bit less onerous requirements on the non-banks versus the big banks. So there's a few trade-offs, aren't there?
Exactly. Construction is a bit of an issue though, because construction costs are up. So it is, the margins are pretty tight. It's pretty tight to get to your 20%. But some of them are able to do it. I think it's the land value that's giving way, that's making it balance.
There's a lot of competition for builders. There's a lot of builders going to the Gold Coast, and there's a lot of builders with not much work. So as far as the labour side of it, and people paying themselves wages and margins, it's pretty competitive, certainly in Auckland. And in some other regions of the area. So you're getting quite good build rates at the moment.
Okay.
But yeah, like you said, material costs, they're still going up.
Well, and as we said, development contributions are going up. It's still as difficult as ever to get a consent. There's more and more requirements. I've got to prove that there are no bats again. And that'll probably cost me 10 grand. And then they'll say there were no bats.
They're not saying no bats. They're saying just in case there are bats, what do? They've moved on. They're not even acknowledging these bets. Okay. Look,
spending money. Well, actually, while we're on rates, be a little bit careful if you're fixing a mortgage at the moment. You really want to fix short term. Banks are being very tricky. They are offering lower rates further out along the curves. If you're floating, you could be paying somewhere in the high 7.5%, for example. But if you want to fix for 3 years, you might be right down at about 6.2, 6.3. Now, that looks very attractive at the moment, but rates are likely to drop. I mean, Jared Kerr at Kiwibank expects 12 drops. 9th of October, they're expecting another 0.25% drop, and then you could see rates with a 5 in front of them. So banks are sort of they're offering you some sugar out there, 2, 3, 5 years, because they want you to lock in at those higher rates. And very quickly, possibly even before Christmas, you might be able to get 5.75. Now you're locked in at 6.2 or 6.3 or 6.5. And if you want to break, the break fees are horrendous. Just keep that in mind. And maybe you're like, yeah, I understand that. That's not tricky, but make sure you tell your friends and your family as well.
We are assuming, I mean, I'm of this very opinion, but we are assuming that's a one-way direction for interest rates, right?
Yes.
So
I think they'll drop faster and harder than's being predicted. I think the Reserve Bank's gone.
A few people told me, should we get ahead of it? Maybe we shouldn't get ahead of ourselves. But in the finance world, 9 out of 10 economists are, get the time right 3 times a day or something, isn't it? One of those statistic jokes. Look, John, it's an interesting time of the cycle because things are looking, there's more. We've heard from a planner. He's got more applications than ever from developers. Developers are buying sites back. You're buying sites. You bought a few after a few years. I'm not doing much. There's a lot of overstock there's a lot of terrace house products still in the market. There's developers with existing stock offering 5-year rental guarantees, which is extreme really, and cashbacks and all these incentives. So There's still a lot of stock to move. There's movement in existing houses. We're in this interesting situation. And what we're seeing now is some of the fallout all over the news. We've got New Zealand's tallest residential tower, Seascape. The developer and the contractor at Loggerheads, they've stopped construction. No good can come from stopping a 40-something story building.
Actually, I've seen pictures of that. So the structure's up, right?
Yeah, the structure's
up. The floors are there.
Some of the cladding's on, but not all of it, and they've tried to waterproof it. But, I can imagine the cost, it's been going on since 2019. It's unfortunate for the people involved. They took 2.5 years to get out of the ground. They didn't get many pre-sales. The cost to complete now, it looks like it's 70% finished. I reckon it still could be $200 million. And I think the original budget was $250 million.
No.
This is one of those, you could write a book. This is possibly, they're going to lose $100 million. I'm probably even conservative.
Oh my gosh.
Look, there's another project.
Where's that money come from? Whose money?
From China. That's from China. You don't blame both of them. They got done over by COVID and problems and maybe some of their own making, etc. But wow. And you don't want to turn into too much of an eyesore, because we've got some pictures of the project in LA. Now, it was started in 2019. Chinese developer, God bless them, bailed on the country, ditched it, and has left these 3 big, massive towers in LA, which are all covered in, it actually looks quite interesting, all covered in graffiti now. Someone got on and did all the graffiti there.
So it's an artwork. Sure, it wasn't Banksy.
It's a blight on the landscape. We've got one in Epsom, which has been up for about 5 years, where I just read in the news, whole of scaffolding fell down off the side of it and it impaled a car in the neighbouring property, And we've got this project, Beechcroft and Onehunga, which went through one developer, and then another developer's bought it, and he's having a fight with the contractor, and they've walked off. There's another project, in, I won't say where black mould has been detected. When you leave something in the elements for 2 years, it's a whole system. It's the facade system. You can't just leave it unprotected.
No.
And, black mould's affected it, and they've had to replace a whole lot of stuff. Does no good for your sales. And I reckon this is the end of cycle fallout stuff. You would have thought it happened 2 years ago, but things have such a massive lag in property development.
Yeah, which is why Duval were able to hang on for as long as they could, right?
Yeah.
It's this stage where they just can't hang on any further.
But if you're investing in Duval, you're investing in a property developer. Love property developers, I hate them. Investors like the fact that someone's getting rich and they can get money and wealthy as well by investing in property development. But investors should, I don't know who's advising them, you are investing in a property developer and in property development, and it's risky. Just do a little bit of your portfolio, not the whole lot.
It is risky. Property development is risky. That's why you've got big risk and big rewards. That's what makes it so interesting. But it's a heck of a lot more risky when you're investing with someone who's already been bankrupted once.
I saw the ex-blue chip chap. He's gone to jail, or going to jail in Australia, and he had a scheme back here in New Zealand, which is quite. It probably sounded okay at the time to investors. You buy a unit, a pre-sale apartment unit, and then you on-sell it before you have to settle. Right? That was the business model. The problem
they
was,
also had a guaranteed buyback. I remember I looked at the contract. I saw it first. It was a Waikato Home Show, right, and they were doing a talk there, and the room was packed, and everyone was buzzing, and this was like the best thing since sliced bread. So I put my name down, and they sent me some information. It took me quite a while to get all the detail, and I remember reading through it, and there was a part of it where they guaranteed to buy the property back for you from a certain discount or whatever, and that was the first red flag for me, was just, how can they possibly do that? If 100 people turned around and wanted them to buy their property back, where would they get the money from anyway? But then who's going to lend against that kind of contract? I mean, the bank's not going to lend you money to sell a house that you have to buy back again. They were just, it was.
Anyway, so, I mean, a lot of that's property, right? There's an element of Ponzi-ness to it. When the market drops, things can happen. So you just gotta, but you need people like Kenyon to build stuff, right? You need people to build houses, don't you? Maybe don't need Kenyon, but you need people to build houses. We do need people to build houses, and building houses in New Zealand is a high risk venture because nobody actually wants them. The government doesn't want them. The councils don't want them. No, the neighbours don't want them. Nobody actually wants them. And we all say we want affordable housing and want our kids to be able to afford a home, but no government or council has ever done anything to make houses more affordable. It just doesn't happen. They just keep going one way. I'll wrap the news up with an interesting thing. James Earl Jones, you know him, the voice of Darth Vader and CNN?
Yes, he passed away, didn't he?
Yeah, he died at
Recently?
93.
Yeah. Sad. Oh, he's a good
So I
one.
just Googled him, and I just Googled James Earl Jones and property, and sure enough, the article says he built quite the property empire in Dutchess quite the property empire in Dutchess County over the years. Property records indicate that he owned 10 neighbouring properties at the time of his passing. So even James Earl Jones was doing property. Now,
That's
tenants.
interesting.
What's happening with the tenant rules, John?
There is a little bit of the balance of power shifting a little bit again. So the new government is bringing back no cause terminations, which is basically just giving landlords a little bit of flexibility with their homes. So you can ask someone to leave the property within 90 days. Something that's giving tenants a little bit more is that you can't stop people having pets anymore. Currently, you can take 4 weeks rent as bond maximum. If tenants have pets, you can take another 2 weeks, so you can take 6 weeks.
John, have you ever had, all my tenants, I've put cat doors in. Have you ever had any problems with pets and tenants?
Yes, the first property that I bought in Richmond Street in Cambridge that I still own today, there were some young girls renting it at some point, young girls in their 20s. And I can't remember why we went there, maybe because the property manager had raised the issue, and we went to the property and they had a half a dozen kittens, and the place stunk. Absolutely stunk. So they obviously hadn't been house trained. They didn't have litter trays. They didn't have cat doors, whatever. The place was we ended up having to replace the carpets. That's how bad it was. It was pretty gross. So people who look after their pets, it's not a problem. I don't have a problem with that. I would like to have some control over what kind of pets. There are some dogs that I wouldn't want to have on my property, for example. Just for safety and the safety of the property manager,
or noise, right?
Neighbours,
bugging the neighbours,
noise as well if they're barking all the time. But around that no-cause tenancy, I think that's going to help supply of property in places where it's become very, very hard to rent, like Queenstown, like all the beach towns, right? Yep. Because what they didn't take into account, one of the unintended consequences when removing the ability to give someone 90 days notice, was that you also could not end a fixed term tenancy. It became periodic. So what that meant is I couldn't rent out my beach house for 10 months or 11 months and have it end, and then I could spend a month there in my beach house, and then I could rent it out again for 11 months because I couldn't get the tenants out. So guess what? I didn't rent out my beach house. And apparently that was happening in Queenstown as well. So a lot of people switched to Airbnb, but these are houses that could have been available to tenants for 10 or 11 months of the year. And if you're thinking, where do the tenants go? Well, some of these tenants, if you're living in a beach town, chances are your family is in Hamilton or Cambridge or Auckland, and you go home for a month potentially, or travel or whatever else it is.
I got a little unit, little place, my beach batch, little unit in Mount Maunganui, and it's got too hard, but need the money, rent it out. And the thing is, though, there's builders who need to rent accommodation in the Bay. The Bay's got one of the worst rental markets in the country at the moment. And now, our friends, they're renting their house in Whangamata to builders for 4 months, right? Yeah, they're doing it on commercial terms, but why can't you? Ending the fixed term tenancy thing was ridiculous, because that's two people agreeing to live somewhere for 10 months and then parting ways. So
you're not capable of entering into an agreement, Andrew. You're not smart enough. The government knows best. You're not a grown up. You can't make your own decisions.
Well, they're changing it.
Another unintended consequence was, a lot of people missed this one, was if your rental property was owned by a trust, and maybe your daughter came home and she's been in the UK for 2 years, and you're like, oh great, well she can move into the property. I'll give tenants notice, because you can give notice for a family member to move in. But guess what? A trust doesn't have a family. A trust is a legal entity and it doesn't have children. So you couldn't give notice on the grounds of a family member moving in. And I'm sure a lot of people got caught out.
That'd be interesting in a divorce situation, wouldn't it? That would be very interesting.
It would be. I don't know how you could get out of it.
Hopefully they throw this out and it doesn't come back in two years' time.
Well, the problem is we have we're building another rental shortage, and as Jared Kerr said in his report, rents are going up at the fastest rate in 30 years, and in fact, it's going up at a fast rate, even though there are lots of accidental landlords around the country. I know of some building companies that have 30, 40, 50 properties for rent at the moment because they can't sell them. New townhouses. Yep. If rents are going up at this rate while we have all these accidental landlords, what happens when these townhouses start selling?
Yeah, absolutely.
It's going to be a problem. I mean, it's great if you own property because it's going to keep on going up, and it's always going to keep on going up anyway. I mean, inflation is always driven by government spending. It's creating new money, and they create new money in it, so people have got more money to pay for the same things, right? If you don't increase the amount of goods and services at the same rate that you increase the money supply, then the cost of things increases. I mean, it's simple. That's just how it works. That's what happened in 2020. When you lock people down and you print a whole lot of money, or you borrow a whole lot of money and you give it to these people, then the cost of everything goes up. I mean, it's not rocket science, but. Anyway, on the positive side, look, as I said, the economists are expecting house prices to rise next year. So if you own property, then hopefully you'll see a little bit of a benefit.
Right. Yep. So all about to change. Motivation.
Yes, sir.
You got something on motivation.
I've done a lot of Tony Robbins events, and he is a very, very special guy, not just because he's absolutely massive, which he is. I shook his hand once, I tried to, and I shook one of his fingers.
Right.
The guy is a giant. But one of the things that, look, I mean, it's sometimes quite hard to keep positive with property development because you do get a whole lot of things thrown at you, and sometimes you feel like it's sort of you against the world. But one of the things that Tony Robbins says that I think is quite important is that life is happening for you, not to you. So life is happening for you, okay? And I think that's a pretty cool mindset to keep that in mind, that life is happening for you, not to you. You've got some control over it, and especially around how you respond to things. You've got that responsibility. You decide how you want to respond to events. And I think it's really important to try and keep that positive mindset. Keep your eye on the prize. What is the goal? You want to get to the end of your development in the shortest time possible. You want to try and stay on time and stay on budget. And you've got to be really, really focused. You've got to stay focused. You've got to think about your costs. You've got to keep a really sharp control on those. I mean, just think about something as simple as internal doors. You build a bunch of townhouses, you could buy 50 doors. If you could get those for $50 less per door, there's a $2,500 that you've generated just in one step. And you're doing this, all the way through the process. You're trying to control your costs. You're trying to keep things on time. You've got to keep it moving through the process, and you've just got to try and stay positive, and try and learn from it. And even when things don't go well, you'll do another development and you take this experience with you. And as I have done over the last 20 years, and it does get easier because you learn how to deal with things.
Let's dig into
know
that.
what's coming up next.
Let's dig into that. Put you on the spot. What was a thing that happened during development, not nowadays, but before you had, before you'd amassed a bit of money, really, in the dark place, and you had to really fight through it? What, do you have a situation you can explain to us?
Probably happened a couple of times. Certainly at least once with manholes being in the neighbours, and they didn't give you access. I've talked about that. We've had ones where council installed sewer manholes on the road, but installed it too high. So we ended up having to put in sewer pumps, which weren't necessary, and we had to cover the cost of those. We've had others where when we bought the site and did due diligence, that flooding wasn't an issue. And then by the time we submitted our resource consent, it was an issue, just out of the blue. It's a lot of those unknown out of the blue events, which are I think the most difficult to deal with, because it just seems so unfair. It's like someone's, it's like, we're going to get you. Why do you think you can do a development there? We'll stop you. Of course it's not It's not like that, but it's sometimes it can be difficult to maintain that kind of that positive, creative, that mindset that keeps you on going. And I think that's one of the reasons why I set up the Property Development Club, is so that we can get people together, and we've got the first meetup in Cambridge next week, and it'll be a case of, people getting to know each other, and there'll be, we've already got now over 240 members in the club. There's guaranteed to be someone at the same level as you are, facing the same kind of issues you are, and the same concerns and the same doubts. And I think putting people together to encourage each other, to almost have what's the word when you've got someone like going to the gym. If you go with a buddy, it kind of keeps you on track, right?
Spotting. Yeah, they spot you. Spot the weight. You can lift more weight. You can lift more weight with a friend.
You can, definitely, for the spotting, but also that you go, right?
Yeah.
It's like, Andrew, where are you? I'm at the gym. Oh, I don't really feel like it today. No, come on, I'm here. You got to be here, and then you do the same for me. Keeping each other on track, and I think that'll be really important as well. In the club to keep each other going.
All sales pitches aside, I mean, it was a great session a week or so ago when we had 2 sites, and everyone was, 2 people brave enough to put their development proposals forward for the group to critique. It was like an architectural critique back in design school. Used to hate those, but they were brave, and
I think they got a lot of value, though, right?
Absolutely,
they got a lot of value in it.
The ideas came flowing.
And it wasn't just from you and I. I mean, we've got a lot of experience between us.
We let the community talk, and that's going to make them more money. Some of the ideas will make them more money.
It is. So there were some very good ideas, and we've got people with development experience. It's not that everyone in the club is a newbie. We've got people who have done developments before. They just want to get better at it. They want to learn more. They want to be part of a community of something bigger. But we've got builders, we've got plumbers, we've got electricians, we've got planners, we've got all real estate agents. We've got all kinds of property people who are in the club who have a lot of great ideas, and a lot of them. One of the surveyors I talked to, he's been around surveying for 30 years. He's got a ton of experience, but he's never done his own development, right? So we've got people like that in the club who've got a wealth of experience. They've been there, done that, but not with their own money, and that's another step, right? That's another whole learning process, and a lot of it's internal and very individual. It's like I saw it when I was trading derivatives in London, and I ended up setting up a company for a Dutch firm in the city of London. And I arrived one day. It was actually Lady Di's funeral. It was a Saturday, and I arrived in this big empty floor in the city of London. And I had to basically start building an office. And I started by hiring an IT manager, and then we started buying equipment. And one of the things I was doing, we were setting up trading desks so people could come in and they could come off the floor and they could trade. But one of the things I discovered was teaching people to trade. One of the things I would do is we would start them out in paper trading. So they would be in the live market and they could buy and sell. And almost every one of them did really, really well until we backed them with real money.
Right.
And then the percentage dropped right away. Then it ended up being maybe 1 in 10, 1 in 15 who still did well.
Less risk or more risk or something else?
Emotions. Their emotions.
Right.
Whether they were afraid and did the wrong thing. There were some simple things that you learn when you're trading in the markets, and one of them is to cut your losses and run your profits. Okay, very easy to do on paper. So you buy and the market goes up. Maybe you buy some more and it goes up, and you buy some more, and then it starts to come back. Now, if your view is, and so you might only be trading in and out, you might be day trading, so you're only trading over a few minutes of time. But if your view is over the next couple of hours, the market's going to continue to go up, you sit through those pullbacks, and sometimes you even add to your position in some of those pullbacks, and then it goes, because the market never goes in a straight line, right? Mm-hmm. It's always a jagged chart. So it goes up, it comes back, it goes up, it comes back, but overall it goes up, which is a bit like the housing market. It does that as well, but over a much longer time frame, over years instead of minutes. What you would see these guys do is they would buy, and they'd be all gusto, and I can see it on the chart, I can see where this is going up, great, and they buy a bit more, and it'll come back, and then they start losing a little bit. And then they can't take it, right? They start stressing out and they're nervous and they're like, oh, now I'm in a loss position. And then they get out. And then the market goes the way they knew it was going to go.
Yeah.
And then they get angry and now they chase it. And now they're buying it up here and then it comes back. But now it really comes back because it's done its run, right? And so now they're losing. So they ended up buying high, selling low, just holding losses, not holding profits. And it's all mental. And I think like coming back to property development, that's what people need to learn is that mental aspect of it.
I mean, that's like property investment, isn't it? The rule is, if you buy it, just give yourself a 10-year horizon. Let it go up and down and try and forget about it. It's easier said than done in recent times. But, just stay in the market. If you're investing, buying to invest, stay in the market. Time in the market is important. And if your development, basically as quick as possible, especially with changing rules.
Farming within your market is very important. Show you this. This is my this is the first property that I bought in 1997 in Street in Cambridge. I still own it today. It's got my name written on the back. This is unfortunately the only physical title of a property that I own, but it's
right.
It's pretty cool. I really like it. There are It's got the name of the person who bought the property in their role. So there's a Peter Gregory Hick, a joiner, and Linda Ackhurst, home economist. There's one cool one on here. I can never find it though. He's a one of the owners was a piano maker, which I thought was pretty cool.
How long ago did you buy that?
7.
Yeah.
The 10th of April, 1997. According to the title. So pretty cool. So hold for a long time. Just buy the blooming things and hold them. Why would you sell? If you've got a great property and it's working well for you, why would you sell it? That's what banks are for, right? You borrow against it. And now I'm in the process of subdividing it. I'm going to build on the back, and then I'm holding 2 properties. So, yeah. Anyway, there was a little bit on mindset.
Now you got a book for us this week, John?
I have the book, and the book is right here. And if you can see that is The Everything Store by Brad Stone. So it's the story of Jeff Bezos and Amazon. So I think it's a really really interesting story. It's not. Just imagine Jeff Bezos is not necessarily always the easiest guy to deal with. He's incredibly focused. He always saw the company as a tech company, and he's a guy who's pretty obsessed, really obsessed with innovation. One of the things that they talk about is his day one approach.
Right.
He always treats the company as if it's a startup, as if it's day one. And actually, like we were talking about before, he's actually incredibly frugal. So when they started out, he wanted to buy desks, but he thought the price for these desks was ridiculously expensive. So they actually bought secondhand doors. Buy a bloody table.
Yeah, but
one of the cool things. Yeah,
is he the richest? It's one of the richest men in the world, isn't he?
Oh hell yeah. Yeah. By a mile. So experiment and take risks is a big thing that comes out of it. Like he experiments all the time. They just continually are trying new stuff, trying it out. Does it work? And that's something I've been doing with the social media. Sort of you'll see me on Facebook and Instagram and Twitter and TikTok and all over the place, and I'm just trying stuff out. I mean, yeah, I've been learning, and I've been working with with mentors and getting advice and things like that. But a lot of stuff in life is just giving it a go. Really, it's trying it out. So, but this is I think this is a really good book. It's interesting. You'll learn something from it. It's even got a few photographs in there. So that's The Everything Store by Jeff Bezos, the story of Amazon. And really interesting peek behind the curtains of one of the world's most successful companies and wealthiest entrepreneurs. Just seeing the way that he thinks, I guess.
These politicians, the new government, which seems to be doing a better job than the last government, these politicians, they say they want to improve housing, right? They want to enable supply and everything else.
Yep.
And things just seem to be getting harder. I mean, what are your top 3 or your top 2 points that this government can do to get New Zealand building more affordable housing? Any thoughts on that?
Keep the pressure on councils. I think, well, they need to keep the pressure on councils in terms of freeing up to increase density, right? Because just paving over more and more of the countryside is not going to fix it. Hamilton's so fixated on peacocks, right? And they spent this $100 million building a bridge to build thousands of new homes.
Did you walk over the bridge? I saw a lot of people walking over the bridge.
Yeah.
Great day out walking over the bridge. Did you walk over the bridge?
No, I didn't. No, look, it's great, and it's also better access through to the airport, right? Which is good, and there's a massive industrial area at the airport, so that's all good, linking it all up. But new, standalone housing is not going to solve our problem, right? We need more density, we need more townhouses, we need more duplexes, we need more affordable housing, and to do that, we need to invest in infrastructure. So it needs to go hand in hand. Like the government needs to keep putting pressure on councils to allow more density, to allow more housing. But they need to assist them with the infrastructure as well in some way.
I don't know how it works. Maybe it doesn't work, but wouldn't it be awesome to know if you're selling an $800,000 house in Hamilton and the $100,000 of GST you pay? Imagine if you knew that was going directly into an infrastructure fund and funding within the next 5 years, roads and water and schools and whatever in that area, wouldn't that be great?
That would be very cool. That would be very cool, because it's a huge chunk, right? You sell $1 million property and 150 grand goes to the government, right? So the buyer is paying 150 grand tax, and they don't talk about that. You hardly ever hear that. Why don't people talk about that? That a big chunk of our housing cost is tax, just the same way that a big chunk of our fuel cost. You buy petrol or diesel, what percentage of that's tax? Like 70% or something ridiculous.
Imagine how productive we would be as a nation if instead of the 150 grand per house going to council to administer, it was actually given back to the developer who was forced to spend, let's say 10 houses, $1.5 million on infrastructure in your area.
Wow. That would be cool. Yeah.
I'll write that in.
That would be
Chris Luxon.
That would be very good. The only problem is then you'd have people like Duval who would just that 150 grand would go into the next few hours of the jet time or whatever. I don't know, onto another role. So I don't know. But no, something needs to happen there. It's just incredibly frustrating that housing just continues to cost more and more and more.
I'm scared of RMA reform. I mean, we sort of got there's horrible things in the RMA, but we sort of got used to it. And then the last government proposed to change it all, and then this government's proposing to do something. If there's less rules, I think it will work. But I'm a bit scared of changing everything again. I don't know. What do you think of RMA reform? We don't even know what it is yet, do we?
If it reduces the number of rules, can we just cut it in half or three quarters? We just need to cut back. We've got so much control. It's getting to the point where I wonder why I bother putting plans together and submitting them to council. Why don't I just go to council with my site and say, tell me what I'm allowed to build. Give me the plans. And I'll try and make that work. And it'll just save all this silly dance that we're doing where I pretend like I've got some control over what I'm able to build.
Yeah, it's unbelievable. Well,
we're doing something about it, right? So we're doing something about it by, one, we're building houses, right? So we're actually building houses. That's what we do all day, every day, is actually build houses. And number two, we're teaching more people how to do developments.
Yeah.
Right? And if more people know how to build more houses, then we'll get more houses, right? So at least we're doing something about it. And I think more people need to do more about it, because one of the problems we have in this country now is that we're on this downward slide, right, at the moment. And it started, I don't know, maybe 6, 7, 8 years ago, where a lot of people aren't really that interested in working, and they don't really have to try that hard, and school's not really interesting, and and it's like, and you shouldn't have to, right? You shouldn't have to put yourself under pressure, and if you don't feel well or whatever, you shouldn't have to come to work, and unfortunately, we're taxes having to pick up the slack for where people aren't working and covering, this new attitude of meh, and we're getting poorer, right? And our roads are getting worse, and our healthcare system's getting, apparently you don't want to go to a hospital at the moment. The wait times in emergency rooms are horrendous. Even getting a GP is difficult in a lot of parts of the country. The education standards, well, there's something recently, someone told me that at their school, and they, the NZQA, and there was some exam that they needed to pass just to go to the next level, and it's something that everybody pretty much should pass, and the pass rate was 50%, right? And this wasn't a complex exam. This was, it's basic maths and English and, simple stuff that most people should know. And apparently they thought the failure rate was going to be somewhere around 25%. It was 50%. So
That's terrible.
We're having real problems. It really worries me, it really worries me where we're going. And, I was recently in Fiji. It was only when I came back that I realized we've been going to Fiji for many years. I don't know, let's say 15 years or more the first time. In fact, the first time I went to Fiji was even before that. And I used to think how poor Fiji was, like, oh my God, it's a third world country and they're so poor and whatever. I didn't even realize till I came back home that I hadn't even noticed that.
Right.
In Fiji, right? So we drove through Nandi, and it looks like lots of New Zealand today.
Yeah.
And we are slipping. We're just slipping down. We're near the bottom of the OECD and lots of different things. And again, the problem is I'm not just complaining. I'm saying, what are we doing about it? What are we doing about it? I don't see what we're doing anything about it, right? Just raising taxes is not going to fix it.
No,
so you'll get no money for the government to waste on just crap, right?
Yeah.
Like all the money they wasted during COVID, which hasn't benefited anybody. It was just a lolly scramble, and here's some money, and now it's gone, and now we're poor again. Brilliant. Now we've got this big debt that we need to fund. But what are we actually doing? We're not building any more affordable housing. We're not building enough of that. We're not doing proper education. We're not doing hospital. How do we fix it? And all I can do is do what I do. I know how to build houses, and I'm teaching people how to build houses, right? And that's what I'm doing to try and make it better. But, how do we fix this?
Well,
I think everybody needs to step up, right? Everyone needs to step up.
We better hurry up because we're going to Australia. I've just known someone I hired, really astute. He came back from the UK especially, and he's going off to Australia end of the month, right? And he's a talent in the development management world, and that's what's happening to tradies and professionals and everything. Now, I'm not sure it's too much rosier over in Australia, to be fair, but there is certainly more opportunity.
Yeah,
if you've been looking into the Australian market.
Not really. I do know that the only sort of part of the country I look at is Queensland, really. I really like Noosa and Noosaville, actually, in particular, along the river there. It's a lovely spot. I like to spend more time there in the winters coming up. So I may actually do a development in Queensland. So something I might look at in the next couple of years is doing a couple of townhouse developments over there, and just more out of interest than anything else, and it'd be a good way to get to know some people in the area if I want to spend a bit more time there in the winter. Yeah, Queensland seems to be still doing well. A lot of internal migration, people coming out of the colder parts from, Tasmania and out of Melbourne. House prices in Melbourne have actually been dropping. Melbourne's underperforming compared to the rest of the country. I don't know if that had something to do with, they were the worst hit during COVID with crazy lockdowns, lots of controls.
They've also got a Labor government.
Yeah, so but yeah, Queensland seems to be going well. A lot of infrastructure going in there. They Australians do that well. They actually build infrastructure that that lasts for a few years. Unlike us, who we build a motorway that's undersized when it's finished.
Someone was telling me they're still building Transmission Gully.
What?
In Wellington. Yeah, someone heard it on the radio the other day, and they're still building it.
New Zealand's still a great place to live. There are far more Kiwis here than Aussies, which is a good thing.
Well, I think we agree it's better than Britain, right?
Man, Britain's a shambles. Absolute shambles at the moment. Absolute shambles. Their immigration, they had over 1 million people move to the UK in the last year. And I thought Brexit was about stopping immigration.
Right, yeah.
Right? It was about cutting the tie. But apparently you can't just stop the flow for some reason. It's like, I don't know whether they've got this tunnel right now, and I guess people could get through it somehow.
Well, they need a lot of houses as well. So all the Western world needs more houses. So, proper development, it's the place to be. It's the place to be. Well, got to get through the odd sour patch.
Well, I think all of the Western world has a shortage of housing because we've all contracted the woke mind virus, right? So we're all worried about all these other things. We're not worried about families, children growing up in motels and completely unsuitable environments, and being exposed to things they shouldn't be. We're not worried about people living in cars or overcrowding. That doesn't worry us. What we're concerned about is all this woke ideology, and that's way more important. So yeah, housing's not important, which is just complete madness. And at some point, it's got to turn around. In fact, the first Trump-Harris talk, it started at 1:00 New Zealand time, so we'll have to have a look at that.
Oh, really?
But that's going to be interesting. Yeah, apparently, if Trump gets in, Elon Musk is going to head up an office, a bit like David Seymour, where he's going to cut all of the red tape, right?
Right.
So the plan is that he's going to do what he did with Twitter and go into government and sack 80% of the staff,
Right.
and it's going to perform better. I reckon it's a brilliant idea.
That's-
And if America can make it happen, then other people will look at it and go, Milei's doing it in Argentina at the moment,
What's
right?
our red tape department doing? I hear they're hiring staff. The department of red tape is getting bigger.
Well, they sacked a few people in government who were, having meetings, and everyone cried about it, and it was so sad, and you can't do that, and what about the poor families and all the rest of it. So I think that stopped because you can't be mean. But it'd be interesting because Musk would be the guy to do it, because he'd just go in there with a big axe and just do what he did at Twitter and just go, you guys are all gone. And then we'll hire again the people that we want, and we'll build a better company. And I think that would be a fantastic way to deal with government. I'm sure they could do their job with a fifth of the staff. And if they didn't, then fine. Then private businesses could form to do those tasks that government was doing, and they'll do it at a lower cost, and it'll be more efficient.
You win in the last couple of weeks.
Yeah, well, the Property Development Club course has gone live.
Yep.
That's a big win. That's
a massive win.
Yeah, that's a massive win, and now hopefully the next win will be that it gets good feedback. And that's always interesting when you spend a lot of time and effort and money and reputation, and you stick it on the line, and then you see what happens, right? Hopefully it all works out. What else to win? I think the couple of sites that I bought recently are gonna work out well. I like to buy when there's blood in the water, when you need to be investing, and it's the hardest time to do it because everything looks doom and gloom and it's all negative. But you've got to have that foresight. You've got to have the belief and the optimism that things will get better. And there's nothing surer than people climbing over themselves to buy sites like the ones I've just bought. It's just a matter of time, whether it's in 3 years or 5 years.
I mean, 2021, November 2021, where people were literally climbing over each other to buy sites. That was when irrational exuberance took hold. You got to think the opposite, right? It's hard to do.
Yep.
It's very hard to do.
I sold a lot of sites, 2021, 2022. Yeah, 21 and 22. So sites that I had bought the land, I got the consents, and I was just waiting. And I had them lined up, ready to develop. And I just saw this thing was it was way up here. And my experience from trading has helped, but then also experience of 20 years of development. I just started to sell out. I thought, what's the worst that can happen, right? I didn't get the last bit of the move.
Yeah.
Well, no one ever went broke making a profit.
Yeah.
And I think that's where some of these some developers go wrong, is they get too greedy. They want to squeeze every last little piece out of it, but you can't do that. Everyone has to make money. It's the same reason I sell off the plans, right? I sell townhouses off the plans to reduce my risk. But that costs me something, right? I lose the upside, but it means that my buyers potentially make a lot of money.
The potential
right?
upside.
If I look at Palmerston Street, I think we sold those off the plans for like $599. They were worth about $699 on completion, right? So the buyers put down a 10% deposit, $60,000, and they made $100 in 12, 18 months. That's awesome. You know, I don't look at it like that. Oh, look, I could have made another, what was it, I think 7 units, $700,000. No, I had a profitable project and my investors did very well and everybody's happy and we all move on. You know, it's not about squeezing out every last cent. And it's the same with the property development club. You know, I could sell that course easily for $5,000. I mean, there's stuff in there that I prefer other developers didn't know. I mean, it's creating competition, but you know, I'm selling that course at $337 New Zealand, right? I've spent a lot of money setting everything up, the infrastructure, the videos, the training, the time. I'm not going to get that back anytime soon. I believe when you put energy and effort into something, when you put stuff out there, it comes back. And whether you call it karma or universe or whatever it might be, I don't believe you can do a good thing and try and help and not benefit from it, you know. So yeah, so I just think it's going to be
a big win. It's a big win. You said it, you did it. It's on. It's the start.
Yes, and thank you very much for your help, Andrew.
So
because you're a very important part of that process, and having someone with your experience to be able to talk it through and sort of help me get it out. You know, I mean, it's very difficult to.
Did you
try and document what's stuck in the back of your mind?
I mean, I didn't think about numbers. I'm not sure if you thought about numbers, but did you think you'd have 250 people on the day before it launched?
No. No, that's pretty cool, eh? That's pretty cool. And thank you for those people. Anyone who's listening and you've taken the plunge and you think that, you know, I've got something to say that's going to be of value. So I really appreciate that. And this is just the beginning, right? So all of our weekly mentor masterclass calls are being loaded up to the system. So I think there are 4 or 5 up there now. You know, and the course is all there, but we'll add other courses and you know, it's all going to. Now it's going to come down to feedback. What do people want? What do you want to see more of? What are you struggling with? And
where are the gaps? Yeah, where are the gaps?
Exactly. And then we'll just keep on trying to fill those gaps and provide more information. Because at the end of the day, as I said, we build the houses, right? We do. The developers, the builders, the surveyors, everybody involved in the process, the people who sell the carpets, we're all building the houses. Governments don't build houses. Councils don't build houses. People do. And if we don't do it, who's going to do it? Right? If I hadn't built the units that I've had and that I have in Hamilton and Cambridge over the last 20 years, they wouldn't necessarily be there. I mean, they don't just pop up. Somebody has to do it. Someone has to invest their time and energy and money and take the risk and do it. But look, there is an opportunity for more people to get involved. It doesn't have to be ridiculously risky. You don't have to buy a Ferrari and be flashy and show off and have people go, oh, like, he's a dick, he's a developer. You know, you can just be a normal person, run it as a business. Many people do. There's many people that you wouldn't even know they do development, right? And they might do it alongside their job, or they have a business and they do some development. It can be a very lucrative business, and you are helping people, right? You're creating more housing, and that helps tenants, that helps home buyers, it helps people invest for their retirement, you know, by buying investment property and renting it out, you know. So it's a good thing, and I think and that's one thing I want to try and change too with the development club, and as we get more and more known, is try and get that message out there that it's a good thing to be a developer, to be a builder, to be involved in the construction industry and in property. We're an important part of the economy, and we provide houses. Like, we make physical, tangible, real things where people live. This is not about, we're not touting something that you don't need, like the latest gadget, you know. It's not a gadget. It's somebody's home, you know. So that's the cool thing. At the end of the day, we actually make real things that are really needed. So yeah.
So make it easier, government and councils, please.
Now, wouldn't that be nice?
Any final thoughts?
Wouldn't that be nice?
Any final thoughts, John?
Final thoughts.
It's a big win, the Property Development Club.
Stay positive.
Didn't take too much longer than originally estimated, really.
Stay positive. Keep learning. Read books. Go to courses. watch stuff, keep learning. It's so good for you. Every time I read a book, whenever I could just pick this up now and I could start reading, and within a couple of minutes, my mind starts ticking over with ideas and opportunities. And, it's just something about it. Whenever I learn, it's one of the things I really like about learning is that it kind of gets the juices flowing, and you start thinking, and then everything that you learn links up to all the other stuff, like it all works in together. Like if I stopped doing property development and went into some other industry, I wouldn't be starting from zero. There's so many transferable skills. So I just keep learning, and you kind of have to at the moment, spend time on ChatGPT. You need to be using it, right? I mean, it's just changing the way that we work. Get comfortable with technology. Make sure you're comfortable with your phone and your messaging and your email, and you're using, Google Docs, or you're using the Microsoft suite and whatever. Just spend a little bit of time on it each day, and just make sure you're keeping up. Because the change over the next decade is going to be massive. Right?
Yeah.
There is going to be massive tech change. Humanoid robots are already working. They're functioning. They're coming to a place near you. ChatGPT and the likes, all of these AI apps that do all kinds of weird and wonderful things already, they are coming for your job. AI bots are next. So ChatGPT will say, do this and do that and do the other. It might be, I don't know, an event planning. Okay, you want to put on an event, and it'll say, okay, you need to contact an event place and you need to book it out and you need to get food and whatever. You'll be able to send your bot off to do that stuff, right? So they'll be able to go and get quotes for you and so on. It's really, and that's soon. Apparently, the Google and the Elon Musk and Apple and all these guys are getting close to having these things come out. They're gonna change jobs around administration and so on. So, just stay abreast. Spend some time on it. I think it'd be well worthwhile.
It's going to be interesting to see how it changes property development. In your mind, it's like, why can't you just upload these plans into a computer system and the algorithm automatically assesses your plans, no subjectivity, and spits back an answer? Imagine that.
That would be nice, wouldn't it? And 3D models it, prices it all out, goes out for quotes where it needs to. It'd be pretty cool. I want models that I can walk through. I know you can do it now. That's one of the downsides of doing smaller developments like I do, where you're doing 6, 8, 10. It doesn't make sense to spend, as much as you need to today to get 3D models and walkthroughs and all the rest of it. But it's certainly possible, and it's, makes more sense on larger developments. But that would be great too. Just put some goggles on and just, okay, so that window's in the wrong place. It should be over there, or make it a bit bigger or smaller. Or wouldn't it be nice if we had, an alcove in here, or whatever it might be? I'm looking forward to that, using the tech more in design.
It's here, but you got to put a lot of investment into the model. That's the problem. Yeah. Anyway, it'll come.
Exactly.
It's here. It just has to, like everything, it gets faster, better, quicker, easier. Except for council rules. Okay, John.
Cool. Very good. Thank you very much, Andrew. Thank you everyone for listening. If you want to buy residential investment property, please think about Assured Property. We're just Assured Property. Chuck it in Google. We'll come up pretty quick. We've got a couple of townhouses or duplexes, actually, freehold duplex available in Hamilton at the moment. And if you're interested in the Property Development Club, just head over to thepropertydevelopmentclub.com. Don't Google it. The SEO is not working yet. There's a crazy procedure now. Before Google will actually allow you to market your company on Google My Business, you have to do a 3-minute video.
Really?
Okay. Now, I thought this was a scam to start with, and I checked it out. So, no, you really have to do it. You're supposed to start out on the street, showing the street sign, walk to your place of work and show any signage, go inside the building. Logging into things is quite good, and they can obviously not showing your password and stuff, but this is the level they want. This they want proof. Now, if you reckon I'm being scammed, please tell me. But no, look, I mean, I've checked in with social media teams and so on. This is a requirement now. They must have, so much false advertising or something, and that is something that's happening more and more.
They probably have Autobots generating, I want to see someone real behind it.
Yeah, exactly. They want to know you're a real person and
amazing.
And you're legitimate. So you need to actually type in thepropertydevelopmentclub.com. If you put it in Google, you won't find it. Actually, we have put a link up on the Assured Property page. So if you go to assured.co.nz, we do have a link to the Property Development Club there, so you can find us. But yeah, very good. All right. Thank you very much.
Ciao.